So much for your company. I am Pius Kojobaka, looking at our stories. Governor of the Bank of Ghana, Dr. Johnson Isiama, is determined to see lending rates drop to less than 10% before the end of his tenure. Now, he believes this will cushion businesses and increase economic growth. The governor disclosed this in a session with the Ghanaian businesses at the Association of Ghana Industries Corporate Forum.
Very good meeting with the CEOs of all banks in Ghana. And we went deeply into a lot of conversations. And I was telling them that regulating the industry, I want to see more of self-regulation. Because as heads of banks, you know what is good for the industry. Why do you wait for me to come after you? I expect you rather to agree among yourselves and come forth. I am just going to be the referee, and that's the way we are going to move. It was a very constructive session, and I told them one thing. I said, my vision is to see lending rates in this country fall to less than 10%. And it's doable. In other words, before the end of my 4-year term, I want to see lending rates lower than 10% in this country.
And now to that big story we are learning for you. Inflation for the month of May 2025 has dropped significantly to 18.4% year-on-year from the 21.2% recorded in April. And the Ghana Statistical Service attributes the sharp drop to reduction in transportation fares and decline in non-food inflation. Government statistician Dr. Alhassan Idrisu explained that the reduction in fuel prices at the pumps and the subsequent reduction in transport fares contributed to the highest drop by way of inflation for the month of May.
A year-on-year inflation of 18.4% for May 2025, down from 21.2% year-on-year inflation in April 2025. And this May 2025 inflation is actually influenced by food inflation of 22.8%, down from 25% in April 2025, and non-food inflation of 14.4%, down from 17.9% in April 2025. On month-on-month basis, the 0.7% inflation recorded in May from April 2025, or in relation to April 2025, was also influenced by food inflation of 0.9%, which was maintained from the April food inflation of 0.9%, and non-food inflation of 0.6%, down from 0.7% recorded in April 2025. Now, the month-on-month inflation is also influenced by inflation on locally produced items, 0.8%, down from 1.0% in April 2025, and inflation on imported items of 0.6%, down from 0.4% in April 2025. Ladies and gentlemen, in conclusion, what are the key highlights of today's presentation on inflation? The presentation shows that headline inflation declined to 18.4% in May 2025, down from 21.2% in April 2025, and 23.1% in May 2024, marking the lowest rate since February 2022. This is a fifth straight year-on-year decline in inflation and a clear signal that price stability is returning to our economy.
All right, so that's the justification given by the government statistician there. Let's bring in the business community. Chief Executive of the Ghana National Chamber of Commerce and Industry, Mark Bedwabwaji, joins us via Zoom for a conversation at the back of this. Mark, thank you so much for your time. Now, this is the fifth consecutive drop with respect to the rate of inflation, 18.4% you are learning from the 21.2% recorded last month. Your thoughts?
Yeah, for me, I think it's a good news. It's reflection. It means that we are getting closer to the target that we set for ourselves, that is 11.9. So if the disinflation process should continue like this, I'm very optimistic that we are likely to achieve the target. And once inflation is going down, probably pulls also down the producer price index, which will bring some relief to businesses. So for me, it's good news. It also means that some of the policies that we have put in place, tighter monetary policies, fiscal consolidations, market sentiment, and also the appreciation that we have seen in the local currencies yielding positive results for us. So let us all jubilate, let us all enjoy. But I also see from the data that was provided that inflation on locally produced goods is also relatively high, higher than the national average of 18.4, because I see 19.4 as for the locally produced goods, which means that much as we have seen and appreciate that cost of production is slightly going down, I think it's also very high that we expect that we'll put together all the necessary measures to bring inflation on locally produced goods down to an appreciable level that businesses can take advantage of a very conducive business environment that will be created by the reduction in inflation as well and other key macroeconomic indicators.
And Mark, when you get to hear from the Ghana Statistical Service attributing the reduction in fuel prices and transport fares, etc., as reasons for this very drop, looking at the appreciation of the CD and, of course, the continuous drop in fuel prices at the pumps and largely the stability of the macroeconomic fundamentals, do you think it's about time to consider a reduction in the lending rates?
Obviously, I think that for reduction in prices of fuel at the pumps and also fares, transport fares, there's an instant pass-through on inflation. That's why we've seen this reduction in inflation. In fact, if you compare the current inflation of 18.4 to the policy rate of 28, it means there is a real interest rate of about 10%. And for me, it is about time that the central bank should consider critically in their next MPC review to reduce the policy rate. Of course, there will not be any justification now looking at the performance of the local currency, looking at the fact that inflation is that low to 18.4. Then this inflation process is working. So there's a need for us to also reduce the policy rate. I think that in the next MPC sitting and the release of the monetary policy rate, I should expect that at least there should be about 3 percentage points reduction in policy rate in the next sitting. This will bring relief to businesses. And obviously, once policy rates comes down, interest rate will come down. And then cost of production will also come down. The inflation will also be coming down. So I think we need to work it together and look at the real sector as well. You cannot only be thinking about inflation and leave the real sector as well, because the real sector also contributes to the kind of inflation that you have, looking at the cost of production. So if they can reduce it, the better it will be for us and also all of us achieving the inflation target that we have set. So we are very hopeful that for this time around, I don't think that they will even maintain the current 28% for the policy rate, but at least there should be a significant reduction in the policy rate to bring relief to businesses.
All right, let's shift focus to some other developing story we are learning, and it has to do with the passage of the one cedi fuel levy passed by Parliament yesterday to address the energy sector challenges. And as a business group, what do you make of it?
Well, for me, the intention is very good. We all know the challenges we are facing when it comes to the energy sector and the kind of debt we have built for ourselves over the years. So if there is a levy to help us pay this debt, for me, is good. I would think that, for me, the timing and the fact that key stakeholders were not consulted is a problem for me, because they are generally those that are going to be affected. For Chamber of Commerce, for instance, we heard it on the floor of Parliament when the debate was raging on, and we would have expected that at least the key stakeholders should have been consulted. The other bit has to do with the rate. We've just started enjoying the benefit of the appreciation of the local currency and the fact that fuel prices had gone down and transportation fares had also gone down. Then all of a sudden, we see an increase an imposition of a levy of a sort of a tax that will increase the prices at the pump, which obviously will reduce the benefit that all of us are enjoying. So for me, the timing is not too right, the fact that we need to enjoy ourselves a bit. The other bit also had to do with the rate. I think that the 1 cedi per litre is on the higher side. Because, if you calculate, it's about 8% of the cost of a litre. And I would have expected at least once they are introducing it, they will introduce it at a lower rate. And then if they have to build it up, that will be fine. But the intention is good. That all of us, I think we need to support. Now that it's been passed, there may be little that we can do, but we'll continuously engage the key stakeholders and see what we can do. But one thing that I have to add is that we need to be able to understand, or I don't know, I haven't totally read through the bill, but some of these levies or taxes are supposed to be temporary, just to solve a specific problem, just as they have stated, that's for us to be able to pay the energy sector debt. So at a point in time when we have been able to do that, it is important they come to us and then remove some of these levies and taxes. We have seen temporary levies being converted into permanent levies, and in the end, it's not helping businesses.
All right.
I also expect that there should be an accountability. Every month or every 2 months, they should be able to tell us how much they have been able to raise, how much they've been able to pay when it comes to energy sector levy, so that people will know that the reason why they impose the levy has been used for that purpose. And that will give comfort to all of us. We are here to support the economy to grow, and doing so is something that I don't think anybody will be happy about.
Very well,
so
thank you.
What else we support, I think they have to also look at the timing as well.
Thank you so much, Mark Bedwawaji, Chief Executive of the Ghana National Chamber of Commerce and Industries. I truly appreciate the time. Now, the Bank of Ghana has disclosed that it intends to tighten all remittance channels to stabilize the cedi. According to the Governor of the Bank of Ghana, Dr. Johnson Esiema, remittances are crucial in sustaining the country's forex regime and improving the economy. He spoke at a forum organized by the Association of Ghana Industries.
I remember I told His Excellency the President there were 2 things I thought could stabilize the cedi, and I'm beginning to see those 2 things play out. If we block leakages when it comes to the gold sector, and if we block leakages when it comes to remittances, I told His Excellency I will stabilize the cedi, and I'm seeing just that. So far with the gold board, we believe that smuggling and other leakages will reduce, and the next plan is to also tackle remittance inflows. I wouldn't go into details about the platforms we intend to put in place, but our objective is to ensure that every dollar that is remitted is made to count. In due course, we will explain the way forward on monitoring remittance inflows. So these gains are not accidental. They are the result of deliberate, coordinated, and credible policy action that we are implementing.
This is still Business Live. We have more for you after this break. And I'm going to tell you this. Government, Jubilee, and Chuniwanyira and Tumi oil fields partners have jointly announced an extension of license covering these areas to 2024. The announcement was made in a statement issued by Tullow Oil. More in this report.
You will see the partners on the Jubilee and 10 fields drill up to 20 additional wells in these areas. This will result in up to $2 billion being invested in Ghana from now to 2040. It will also lead to the commitment by the partners to increase supply of gas from these areas, as well as reduce the gas price from the Jubilee area and the associated gas as well. The Jubilee and 10 partners are now expected to submit for approval a plan of development covering activities in these areas to government for approval. We should cover gas sales agreement. According to government, the deal demonstrates their commitment to foster a stable and attractive investment climate in the country.
And I'd like to take you to myjoyonline.com/business. That's where we have the great stories on that portal for you. Inflation for May 2025 dropped sharply to 18.4%, and we're heavy on this here on Business Live. Also on that portal, 1 cedi fuel levy necessary to address legacy energy debt and under recovery. That's according to Dr. Kwabena Donko. We have more stories for you when you log on to myjoyonline.com/business. I am Pius Kojobaka. Thanks so much for your company.